rates, but the closing costs. And write a check against if we chose to and pay it off. Right now, we don't owe anything. If I wanted to raise $100,000, I could write a check to myself today and then pay it off as I go. The problem is the interest rates are much higher.
How much
When
higher?
I say much higher, they're probably around 9%.
Okay.
Where I can get a mortgage loan in high sixes possibly. Okay.
Yeah.
So a HELOC is not a mortgage loan, although it is a lien on your property. The bank will place a lien. Okay, like Bank of America has a lien on one of my homes for this HELOC. Currently, I don't owe them any money, but if I were to do so and then sell that home, I'd have to pay it off through the sale of the home. Okay.
Okay.
Okay,
Yeah.
it's attached to the property.
Makes sense.
Okay.
Absolutely.
So that's probably the main difference. A mortgage loan is a real estate loan on real property, which is a structure based on real estate. It can't be something you can move around like a mobile home or a motorhome. It's called real property. It's usually a term of, let's say 30 years, and you pay it back monthly. A HELOC you can borrow against, pay it back, and borrow it against,
over and over again.
Over and over and over again. Yeah. So in case of Sharon's situation, we decided her best option, in my opinion, and I gave her my counsel, was to go ahead and buy the condominium and with her daughter on the note with her, even though the daughter's not working currently. Sharon can qualify by herself, but when I put the daughter on there, we can do as an owner-occupied property, which is going to save her a lot of money.
Oh yeah,
she'd like
great.
that.
Yeah, I bet she did.
Yeah, that was what we decided to do last night.
All right, awesome. Okay, so what are the typical fees or costs associated with a mortgage?
Well, there's a lot of third-party costs.
Yeah, everybody wants to know the fees.
Everybody wants to know. They should know the fees.
Yeah.
What I tell people, there's typically 3 buckets of cost. There's the down payment, and let's say that's 5% down or 10% down or whatever it is. And then there's closing costs. And closing costs are third-party costs to the lender, okay, to the appraiser, to surveyors, to attorneys, to title people, recording costs, okay. And they're fixed costs, generally speaking. In other words, if you borrow $200,000, your closing costs are going to be pretty much the same as they would be if you borrow $500,000. So it's not a percentage per se. It's not like we say 1% of the loan amount, but they're typically going to run you anywhere between, let's say, around $4,000.
Okay.
Okay, $4,000 to $4,500 should cover all of your third-party related closing costs, unless you buy points to buy down the rate. That's a little bit different.
Right.
Okay. The third bucket is for what we call prepaid expenses, where we charge 1 year of insurance up front. They have to pay that up front for the property insurance. And then usually if they're going to escrow, we have to collect taxes too. So those are the 3 buckets. And in this market, we're seeing a lot of negotiation where the seller is paying a lot of those fees.
Yes.
Okay.
Yes, they
so
are.
on conventional financings, as an example, if you put down 5%, then the seller by mortgage law, if you will, can pay up to 3% of your closing costs. So if you borrowed $400,000, they could pay up to $12,000 of your closing costs, of the buyer's closing costs. And we're seeing that a lot.
Yeah, actually, I just had a deal not too long ago where I got my clients 18 acres, $700,000 property, but they needed a lower interest rate. And so we actually got the seller to pay $30,000.
Wow.
Towards the closing costs. I know it
was it just land?
No, there's a home on the property, and a barn, and all sorts of things.
Okay.
So, but it was a great deal.
So,
this is the time to do that, though,
So, it is.
Can't be afraid to ask. They didn't think that we'd be able to get it, and I was like, well, we can ask, and we asked, and lo and behold, ask and ye shall receive.
That's called negotiation. We're seeing a lot of that with new home builders too, because they have inventory they got to get rid of.
Oh yeah, they're desperate.
So they're a little more motivated to participate in some sort of seller paid either down buy downs or the interest rates or closing costs.
So I actually just had someone reach out to me on my TikTok channel, and they're very interested in purchasing a home in the state of Texas. They currently live in California. And so I gave them some referrals and who to talk to get approved for a mortgage loan. And the question that they had is, well, how long will that approval process take?
Well, it's usually very fast.
Yes.
There's a lot of efficiencies nowadays in the mortgage space as there was when I started back in the 80s. It was very archaic. It took a couple of months to close a loan, generally speaking.
Mm-hmm.
Okay. So now we can usually close, depending on the person's, as long as they work with us. If we ask for something, we're going to need it. Okay.
Right.
Because there's lots of detail. I'd warn people there's lots of detail. This is not brain surgery. This is a lot of paperwork,
Mm-hmm.
And so as long as the client is willing to help us out on what we need, we can usually close within 3 weeks.
That's awesome.
I wrote a loan yesterday for a man buying a property in Blanco, Texas, outside of Dripping Springs a little bit,
Mm-hmm.
more little country property, bought a new home. And he needs to close by the 8th of August because the builder's on him to close. And I said, we can do it. He's very qualified. He gives me everything I need up front.
Yeah.
We're ready to roll.
That's awesome. So what is the minimum down payment required for a mortgage?
Well, that's a good question too. We do still have certain loans that have zero down. Okay. Primarily veteran loans.
Yeah.
Okay. The VA is a national program. It's not just Texas, but it's been around for 80 years probably, where veterans can buy a property. They have qualified eligibility with zero down.
I think most people know the VA loan, but are there any other loans?
There is.
If you're not military?
Yeah. There is a loan called a USDA.
Okay.
Okay. USDA is a United States Department of Agriculture, which is one of their entities is residential financing.
Mm-hmm.
We used to do a lot of it. Okay. Because when I say used to, what it is, it's a census-based loan.
Mm-hmm.
So it's usually for more rural areas.
Right.
Okay. Like Austin doesn't qualify for USDA. Round Rock, parts of Round Rock may, but mostly they wouldn't because of population.
Yeah. I'm starting to notice on the map, I live in Hutto.
Yeah.
And I think half of Hutto no longer qualifies.
Right.
And I have a feeling in a very short time, Hutto will no longer qualify at all.
Yeah. Kyle used to qualify.
Yeah.
Well, Kyle doesn't qualify because it's grown so much.
Exactly.
We used to do a lot of USDA loans in parts of Pflugerville,
Mm-hmm.
Hutto, Kyle, Texas. They're all gone because the maps change. The census maps change, and the government says, no, we're not going to offer that program anymore, but it's still available, along with down payment programs that the state of Texas, as an example, will offer for first-time buyers. They'll offer usually up to 4% or 5% for down payment assistance.
Yeah.
We may talk about that in a second, but that's also a way for people to get in with little money.
That's awesome.
Yeah. But also the minimum typically is 3% down for conventional or 3.5% down for FHA.
Okay.
Okay.
So I want to talk a little bit more about these special programs or incentives for those first-time home buyers. Are these like classes that people can go take to qualify, what exactly?
You do have to you do have to take a class in the process.
Yeah.
But
okay.
it's online. It's kind of like buying your first home. It tells you the pros and cons and what to look for, et cetera, et cetera. But the state of Texas, depending on your income limit, because they have limits on how much you can earn. Okay, it's typically for people that are earning less than $100,000 or whatever the limit is. I had to look it up, but the state of Texas will offer grant money, so you don't have to pay it back, which is nice.
No, that is pretty nice.
It's very nice. And so first-time buyers are starting to become a bigger part of this market. They're starting to say, hey, I'm tired of paying rent in this apartment at $2,000 a month. I could pay a little bit more for a mortgage loan. So about half our clients right now are first-time buyers.
Now, what qualifies a first-time home buyer exactly?
Okay, first-time buyer is defined as anybody who's never owned a home before, ever, or hasn't owned a primary residence in 3 years.
3 years.
3 years.
Okay. I knew there was a cutoff, like you could have owned a home, but you can become a first-time home buyer after X amount of years. So that number is 3.
That's number 3. Because
Okay.
I'm doing a loan from a man who sold a home about 5 years ago. He's owned a home before, but it's been about 5 years. So he qualifies as a first-time buyer.
Okay. Another question is, are there any potential penalties or anything like that if you pay off your mortgage early?
Generally not. I'd say all the QM loans that we kind of talked about up front do not have any penalties.
Generally. So is there sometimes
There are some in these what they call the non-QM loans. Okay. Typically those investors, those who make those loans, will put either a 2 to 3 or maybe a 5-year penalty on those. So if you pay them off, they're a little riskier loans for the lenders. So they're saying, well, if you pay us, we want to, first of all, higher interest rates, number one, and we will also most likely have a penalty if you pay it off early.
That's amazing.
It could be 6 months of interest or something like that.
You wouldn't think that you get a penalty for trying to stay ahead of your finances.
I know.
That's wild.
So people need to be aware of that.
Yes.
Okay.
Don't be too aggressive.
That's right. That's right. So, I have 3 mortgages here in Austin, and I prepay all of them a little bit each month.
Yeah.
Sometimes if I have a good month, I may write a bigger check. Otherwise, I'll kind of pay them down faster.
Yeah.
And without penalty.
Okay. So what factors would determine my eligibility for a mortgage? Especially next year, what I want to do.
Well, okay. I tell people everything we do for the most part is based on a 2-year look back.
Mm-hmm.
Okay. We look back at 2 years of your job history, number one. And we like to see people that are in the same line of work. Most likely, if you're an engineer, we want you to be an engineer.
Right.
We don't care how many jobs you had. We just want you to be in the same line of work.
Got it.
Now, for young people graduating, I'm doing a loan now for a PhD. He just graduated from UT with a PhD and got a nice job.
Yeah.
He doesn't have work history per se, but he has an engineering degree with a PhD, and he's going into some sort of software work with, so that all comes together as a good formula for him.
Really?
So he can qualify in 1 month.
Really?
Yeah.
Even though he doesn't have that 2-year work
That's
history?
Right, because of his education.
Wow. Okay.
Yeah. So first thing is around income. Now for self-employed, it's a little more complicated.
Yeah, so that's what I am. I'm self-employed since I'm a realtor.
Right.
So, and that's why I have to wait the 2 years because I didn't get my license until last year.
That's
and
right.
So that is why I'm waiting for 2 years.
Any self-employed borrower needs to wait 2 years.
Yeah.
Now I have a client who called me, and she actually owns an LLC, and she was being paid as a contract laborer for this company. And this was a few months ago. I said,
Mm-hmm.
Look, I can't help you get a mortgage because you just started as a contractor. Okay. So she convinced her company. She's very qualified. Otherwise, a lot of money in the bank, good credit,
Mm-hmm.
all that.
Mm-hmm.
I said, well, you just started this job as a contractor. Okay. You don't really work for the company per se. So she convinced them to hire her as a W-2 employee. Now she gets a pay stub, and now we could do the loan.
Oh, wow. Okay.
Yeah.
That's a way around it.
I said, if you could help,
Okay.
if you could work with me on this deal, we can help you out.
So it's not her LLC.
She owned the LLC.
Oh, okay.
She was being paid into an LLC, but on contract with this employer.
Got it.
I said, no, we can't do that because you don't have 2 years. Right.
Okay.
I mean, she has a history of being
Right.
Of the job. I said, here's a strategy, and she made it work, and we're writing that deal up.
I like that strategy.
I like it
That's
too.
A pretty nice strategy.
Now the employer has to agree to that.
Yeah.
Which they did, because apparently she's very valuable.
It would be in their best interest to agree to that.
That's right.
I would think.
That's right.
So
that was a good strategy.
Awesome. Okay. Well, I think we're pretty much through these list of questions for today, and we'll have a part 2 next time.
Yeah, we've got lots more to talk about. I mean, we could even have a part 3, maybe.
Maybe a part 3. Yeah. I like those, the trilogies.
Well, the mortgage industry is not particularly complicated. It's just a lot of detail. There's a lot of options, a lot of moving pieces to it.
Yeah, I think something that I've noticed is people are very interested, but they feel a little bit overwhelmed. And sometimes when you get overwhelmed, it immobilizes you. And so you don't end up doing anything at all, which is the worst thing you could possibly do.
That's right.
So
my client last night she's been a little nervous around this, buying this property. And so I went to go see her. We met together, and we didn't just have a Zoom call or a phone call. I said, let me come visit with you. Maybe I can share some experience with you, and we can work this thing out. She was very grateful. But
so if anybody out there is listening and it feels a little bit overwhelmed and really wants to see if they can get approved for a mortgage, I would highly, highly, highly recommend reaching out to Mark.
Come on.
He is a spring of knowledge. So anything that might be scary, or like you don't even know if you could qualify in this area, or you want to know what type of loan you should go for, Mark can lay everything out for you. And he will walk you through that process, hold your hand the whole way.
I sure will.
There's nothing to be afraid of. There's no reason to
even if I just have a conversation, let's see if you're a good fit. So if you want to contact me, my cell number is 512-789-6967. That's the only number I have actually for 25 years. It's 512-789-6967. And my email address is mark@markhairston.com, spelled Hairston. And you can find us all over social media through Facebook or Instagram or YouTube.
Yeah. Or TikTok.
Or TikTok.
And LinkedIn.
Or whatever,
On every single one you can think of. There we are.
Or the radio show.
Or the radio.
So
on the podcast. Which, by the way, subscribe, please.
Yeah, subscribe to us and come back next week. We're going to have some more great questions around mortgage financing to make sure you're in the best position you can be for you and your family.
Awesome. Thank you so much for having me today, Mark.